Now, if I lost everything in Canada and I have to restart investing all over again, here's exactly what I'll do. Now, before investing anything, I'm going to set aside 3 to 6 months of my monthly expenses. For example, if my monthly expenses for running my family is $1,000, I'm going to set that aside for 3 to 6 months. And the reason for this is investing money you need for your daily expenses or your monthly expenses is a recipe for panic. And panic is how people lose money in the stock market because they tend to sell when the market is down. So I'm just going to make sure I set aside 3 to 6 months emergency funds. The next thing I'll do is to choose the right account. Now, this is very important. In my previous video here, I tried to break down these account features. I'd like you to check it out. But choosing the right account determines how much tax you pay. And you have different registered accounts here in Canada. You have FHSA, TFSA, RRSP, all right, and even the non-registered account. But it's vitally important to choose the right account based on your goal, the time horizon, and the type of asset you want to buy in these accounts. All right, the next thing I'll do is I'm going to diversify my investments. I'm going to put 30% in broad ETFs, and this is going to serve like the foundation for me just to make sure when the account goes into crisis or the market is not performing well, this is going to make sure I don't lose everything. And the second set I'll put is going to be 60%, and I'll put that as dividends in dividend paying investments because I love getting alerts every quarter or every month, and then I'll set dividend reinvestment plan to make sure that it compounds and gets me financial independence over time, right? And then the third layer I'm going to put are growth stocks. These are the high flyers, the guys that will go chase money and then get me high growth in my accounts, right? And then I'm going to leave some 5% for perhaps commodities like gold, like silver, right? Or some other precious metals, just to make sure that account is going to survive different times in the economy, especially when there are crises in the economy, commodities tend to do very well. So diversification, vitally important. Okay, so the next thing I'm gonna do is to automate my investing, right? Because investment should actually happen whether you're motivated or not. It doesn't have to be a situation where you go to your account and then you have to manually click the button to invest. What I'll do is I'll automate it and then I'll put money in the account, right? In my brokerage account. I mean, in Canada here, you have World Simple, Questrade, you have interactive brokers. They all have features for automating investments. So if you put the money there and then you set it to say, hey, every month, every 20th of the month, as soon as I receive my paycheck, debit me and buy such and such stock. The beauty is that you can actually set it to buy based on how your account is diversified so that you don't have to do it manually. And then you keep doing it every month and then yeah, you're gonna see that it will compound over time. Okay, now this one is very important. The next thing I'll do is to ignore the noise. Ignore the noise, because if you look at the stock market right now, there seems to be a lot of noise in the market. I tell you, I've been investing for about 9 years now, and previously it wasn't this noisy in the stock market. And when I talk about noise, I'm talking about news headlines, analyst reports, different people's thoughts on social media. You need to ignore all of those. And but how are you going to ignore the noise? You need to learn how to do the research yourself. And I've actually set up a school where I teach people how to identify great companies. So you need to find out how to identify great companies by yourselves. And there are two ways of doing this. First of all, you need to understand what's called fundamental analysis. I mean, the godfather of investing, Warren Buffett, has said a lot about this, understanding revenue, profitability, understanding a company's free cash flow. And these things are now very simple for you to do. Just do a quick search right there on your phone and you find out the company's strength. And then you decide for yourself whether you need to buy it or not based on your goals. This is vitally important. Ignore the noise. So I've spoken about 5 things I will do if I am going to start all over again. Number 1, I said make sure you don't invest it all. You have to save emergency funds, at least 3 to 6 months emergency funds. Number two is choose the right account. It matters a lot. You can watch this video here to get an insight on the different accounts you can invest in here in Canada. And the third thing we talked about is to diversify your investment. Create an investment portfolio. Vitally important. I actually have a worksheet where I do this for myself, and I'll be happy to share with you. I'll probably put the link in the description. The fourth thing you need to do is to automate your investments. Because if you automate it, don't check all the time, you'll be amazed at what you've built. The last thing to do is to ignore the noise. Do not let fear of missing out push you into investing into the wrong stock. All right, we've come to the end of the video. A portfolio should help you sleep well at night, not create anxiety every morning. If you would need help building your first portfolio, check out the Investor Starter Program below. Hey guys, I'm rooting for you. You can do it. You can create financial freedom for yourself and your family. I'll see you later.